What, according to you, are the biggest challenges these banks are facing in terms of keeping their relevance and competition?
As a customer, I'm not bothered whether I'm banking with bank X or bank Y. I want similar kind of experience from all my banks, and whichever banks basically is able to give me superior experience, I'll stick with that bank. That's the customer tendency.
The urban cooperative banks almost missed out on rupees 0.7 lakh crore. So what, according to you, the credit bureau insights can be leveraged for these urban cooperative banks to not only identify but also retain these high quality borrowers before they opt out to other competition?
Pebble can come in and partner with these banks, work with them to give them insights about their own customers.
Hello everyone, welcome to our YouTube channel. In today's podcast episode, we are going to talk about the urban cooperative banks, which are on a remarkable transformation journey, balancing between the traditionally community financing and the digitally empowered engines, being the inclusive growth for India's financial landscape. It's almost impossible to talk about the evolution of urban cooperative banks and not talk about the National Urban Cooperative Finance and Development Corporation, also known as NUCFDC, which is an NBFC and a futuristic self-regulatory organization. NUCFDC, as we all know, has been formed with the support of Ministry of Cooperation and RBI as a part of Sahkar Se Samruddhi initiative. To dive deeper conversation on this, we have our special guest today, none other than the CEO of NUCFDC, Prabhat Chaturvedi. Alongside, we also have Amol Joshi, Chief Financial Officer from TransUnion Civil. Thanks, Mr. Joshi and Chaturvedi, for joining this conversation. I'll straight dive into my first question to Mr. Chaturvedi. As we all know, the urban cooperative banks are a long-standing trusted institutions in India's financial landscape, especially for the small town and the lower income consumer segment. What, according to you, are the biggest challenges these banks are facing in terms of keeping their relevance and competition?
Yeah, so as you rightly said, these are long-standing institutions. Some of them are more than 100 years old, older than independent India or older than most of the institutions that we see today. And they have lived through all the challenges over the decades. But the biggest challenge that almost all banks and which is probably pronounced more in these banks' case, is the digital transformation that is required. The way the customer is getting accustomed to consuming banking services from commercial banks or NBFCs, that kind of platform, that kind of services, probably these urban cooperative banks are not able to, that experience they are not able to give to the customer. Their system processes are bit antiquated, bit legacy kind of systems, paper-based processes. So how do they transform themselves digitally to provide similar experience? Because as a customer, I'm not bothered whether I'm banking with bank X or bank Y. I want similar kind of experience from all my banks, and whichever banks basically is able to give me superior experience, I'll stick with that bank. That's the customer tendency. One of the challenges that these banks are experiencing is this tech-related challenges, and it is multifold because digital onboarding, digital underwriting, digital customer servicing, those are lacking in most of these institutions. Again, these are almost 1470 plus banks, so all are not alike. They are geographically, linguistically quite diverse. So some are quite evolved institutions, large ones, but I'm talking of the average medium-sized banks in this ecosystem. They are not able to provide that kind of digital experience to their customer. As a result, people who were banking with these banks, their next generation, their kids, who probably availed education loan from some of these banks, are not banking with these banks because that digital experience is lacking, and that is one. Second is the talent crunch, which is visible in all segments right now, because you have Indian corporates growing, they need talent. Then you have global capability centers being built in India for US and Europe and other countries. So a lot of talent is getting utilized in these resources. As a result, organizations who are not very good paymaster, who can't pay above average in market, they are basically fighting for talent, which is true for these urban cooperative banks also. So talent crunch, and that gets pronounced in more specific areas like IT or at CXO level. So almost all the banks we meet, they every third bank is looking for a good CEO, but they are not able to find one. So this talent crunch is also becoming pronounced in urban cooperative banks. Third is the entire concern about compliance and governance issues, the kind of things that have happened with few banks, and the overall compliance posture of these banks can improve. And that is what regulator is also telling these banks, that you need to upgrade yourself on compliance and governance aspects. And fourth, I'll say the capital that is required to grow any business. Because of the structure they are dependent on their members to contribute capital. And if they see a growth opportunity and they require capital to grow, that growth capital has to come from these members only, and it is limited by their ability to contribute. So recently RBI has come out with the discussion paper on increasing avenues for raising capital for these urban cooperative banks. We have also responded to that. And probably if it is a discussion paper right now, it will take almost like 1.5 to 2 years to get formulated into a policy guideline that will help these banks in raising capital. As an umbrella organization, we also have been given this mandate by RBI to augment their capital adequacy ratio. We can contribute through debt instruments, Tier 2 capital, NCDs, but for equity capital, we are waiting for these final guidelines from RBI. So internally, we summarize this with T2 C2 abbreviation, which is talent and tech, compliance and capital. This is the one of the challenges that these banks are facing.
Sure, I think that's a brilliant perspective, and thanks for sharing such a bigger picture with such clarity. Thanks. And building on the same, my next question to Mr. Joshi, and it's certainly a very pleasure to talk about the first and the recent, Sarkar trend, the research report by TransUnion Civil in association with NUCFDC. As per the report, the urban cooperative banks almost missed out on rupees 0.7 lakh crore worth loan to their own customers as they opted out other lenders. So what, according to you, the credit bureau insights can be leveraged for these urban cooperative banks to not only identify but also retain these high quality borrowers before they opt out to other competition?
Right. Firstly, thank you so much for having me on the podcast, and Chaturvedi ji, thank you for such a detailed insight on the challenges that we face. I think we picked up the right point in terms of T2, T2 C2 thing. I think that was appropriate. One of the piece that we can love to partner you with is on the second T, which is on the technology part. Because with CIBIL, we have been working with you, your organization, with most of the banks that are there in the country. And especially in the cooperative sector. The urban cooperative banks are at a size and scale from which they can leapfrog into being larger organizations, and the opportunity is right there in front of us. And the question that Shefali just asked is a classic question of a missed opportunity, which is where someone like a CIBIL can come in and partner with these banks, work with them to give them insights about their own customers, because there's a strong relationship that these banks build with their customers. But allowing them to go and meet their borrowing needs from someone outside is an unfair situation for the cooperative banks. What CIBIL can do is that through their sort of reports that are available, and a lot of banks actually use them, look at their own portfolio, look at their existing to bank ETB, as we call them, existing to bank customers, and looking at our CV, your CMR score, look at the trends that are coming out of that customer, and then help the banks tap into that pool and allow such kind of missed opportunity, to be extinguished and be within the own urban cooperative banks sector only.
Great. Thanks, Mr. Joshi. Can't agree more. This is certainly a very sharp and very insightful perspective. Thanks for that. And moving on, my next question to Mr. Chaturvedi. I would say we all have grown up, with the environment of cooperative banks around us. Like I do remember my parents had been banking with most of the cooperative banks. And that's a nostalgia for me to continue with this conversation is what I can say. Since then I've seen that these are urban cooperative banks definitely have this personal touch and their ethos of customer connect. How do you define that? How are they managing this with the current overall digitization and the overall pressure of modernization? They are still, it's amazing to see that they're still continuing the same ethos and same personal touch. Can you help us understand how are they managing this?
So this is important because if you, for example, any organization has to do their own SWOT analysis, strength, weakness, opportunity, threat. So this is one of their biggest strength. See, you and me, we are all customers of commercial banks. But almost all, I'll not say all, but almost all commercial bank customers don't feel the kind of affinity that a urban cooperative bank customer feels with their banks, because they are one of the co-owners, they are one of the members. With commercial banks, even if you buy share and you technically become a co-owner, you don't feel that association. Somehow these banks have been able to cultivate that kind of relationship with their customer, and all ups and downs that we have seen in past decades, most of that trust remains, and that is something that these banks hold dear for something that they need to protect. What should happen, in my view, another aspect of customer care, for example, all of us are tired of calling customer care numbers and then press this button, press that button, wait for this, go back to menu. Nobody likes that experience. So in urban cooperative banks, fortunately, they have conserved that age-old customer care which is personalized. So in my view, now when they digitize, they need to retain that personal touch, that personalized service aspect, and use technology in the way it is useful for the customer. One example of that can be that AI is very good, large language models are very good in translating, in speaking to the customer in its language, his or her language. So if you can build solutions which are interactive with customer, which respond, even if you are using technology, either use manpower for responding to customer queries, even if you are using technology, it should be able to converse with the customer in customer's language. So basis his location or the way he starts conversation, the system should be able to speak to the customer in the language they understand. Simple queries. Small things like that, even all the customer communications, whether it is written or somebody is calling the customer, it should be in customer's language, because these banks are hyper local. They are basically a part of the local community, local economy. So even when they digitize, if they can retain these elements of personalized service, personalized customer. I remember when I was working with a commercial bank, we did a pilot with Intel, where we said that Intel's chip will be there in our debit card, and when the customer walks in, the sensor will be able to read that Mr. So-and-so is walking in and give an alert on his relationship manager's portal that your important customer is walking in. This is given only to select ultra HNI kind of customers. And it will also give a pop-up of what is the relationship size, what can be a possible reason why he is walking in today. His FD is maturing, his locker agreement is up for renewal, what can be a possible reason? So now this fellow, the relationship manager goes to the customer with a warm hello with his name and with say, sir, probably you are coming for this, we'll get this done, please have a coffee. This compared to the old age banking, or even today if you walk into a bank branch, the experience that you have, I need not narrate, you've all gone through. Right. So if they can retain, even with using technology, you can be hyper personal, you can be hyper relevant for the customer, for the community, for the local economy. That is the flavor that they need to retain. That's my view.